Well, you know, Rachel, for a good, successful real estate investor, research is key, isn't it?
It absolutely is.
You've got to, first of all, look in your own strategy, your own backyard, and understand your own personal situation, cash flow, what's going in, what's going out, long-term goals, etc. But on the ground, type of property, location, everyone's excited by which location I want to buy in and the next trends and the next hotspot. So we thought we would grab one of the finest researchers in the business, Luke Metcalfe from Microburbs, the founder of Microburbs, who delivers precise neighbourhood level data that most buyers never access. And that's on his website, by the way. And I totally agree with that because a lot of people go into detail about their own situation and then flick straight to, that's where I'm buying because I've got a gut feel.
Yeah.
And the research behind that is not found. So there's one component of that, but then the other one is too much analysis paralysis, and I never end up buying. So Luke's going to unpack that for us today. I'm excited to chat. Let's do it. All right, Luke, welcome to This Is Property.
Thank you very much for having me, John and Rachel. It's a pleasure to be here.
Very good. Yeah. So we were speaking offline a little bit in terms of we there's so much goes into research in real estate. Tell us, what is Microburbs and what were you trying to achieve when you first built the research centre?
Yeah, so Microburbs is all about finding the real science behind how we understand suburbs. So when we first started, suburb data was very high level, suburb medians, not much depth. So what we're about is breaking it down into micro markets, into streets, into pockets, so they can see why one area is growing faster than another, and doing primary research to find what are the true drivers of that. So it's really about giving investors evidence instead of just opinions. Like you mentioned there, a classic mistake that investors make is they look in their own backyard, they love the area, the people they meet in the area also like it for the same reasons, and so they'll invest in that. And you have to cast a wider net. There's a lot of suburbs out there, 15,000 of them, but like you say, that could very easily lead to analysis paralysis. So people are lost with all of the data. So our job is to make it clean and simple and focus people on areas that we can prove to the degree that we can that they will actually enjoy above market capital growth.
So, Luke, for everyday buyers and investors, how much does Microburbs actually work behind the scenes?
Yeah, so behind the scenes, we are gathering data from all kinds of weird and wonderful places, individual listings, lots and lots of individual granular data, and building it up into this beautiful data source. And then we're running research on that and then highlighting for people the real indicators that actually do matter, not just ones that people say are important, but we can prove that are actually really drivers of keeping tenants and getting yourself capital growth so that you can build the equity you need so that you can go and get another property.
Yeah.
Awesome. Do you come as a data person or an investor?
Oh, very much a data person. So I've got a background. I've been coding since I was 5. We hire data people and so it's very much data people doing real estate rather than real estate people doing data. We love real estate, obviously. It's just so happens that that's the area where we can provide the most value because it's the biggest decision people make in their lives. And it's very much unregulated and there's a lot of emotions that get in the way. So it's very much data and science for us. I mean, obviously we get opinions on things, but they're more just like to help us remember and to provide understanding on what's coming out of the raw data. So it shouldn't be about my life experience, in my opinion. It should be about what we can actually prove. And it's much less about what's being said in the real estate market. So we're not going to produce an indicator just because people talk about it or it's accepted wisdom. There's issues with relying, so that a lot of the base knowledge of the real estate market comes from the US, but they're not a supply constrained market like we are. So there's different dynamics going on. So it very much comes up from the data, and the data tells us what to surface and what to emphasize.
Must be hard not to invest in every area that you see as a green light to invest in.
Yeah, except the business is growing fast, so I'm very happy to be investing in microburbs. That's quite fine.
Now, Luke, you said there were 15,000 suburbs and you're using thousands of data points per suburb. What ones do you think are the most influential in predicting future growth?
Yeah, absolutely. So the most influential is price, and price. So price predicts price, but the biggest thing that people don't understand is that mean reversion. So markets they overheat all the time.
Yeah.
So if there's been a lot of growth in a suburb, you should get out. For a lot of people, that's confirmation, particularly first-time investors. That's confirmation that there must be value. And they imagine that momentum goes on forever. But in reality, properties will fall back, markets will fall back to the overall growth level for the region and for the country, rather than it's not like some regions shoot off to the moon and others go to zero. They're all kind of moving along together. But this is something that's come up, just creating bots to go and trade property for themselves. This is the top thing that they look at, is just pricing. So bots are very good at working out exactly what the price should be. Humans are a bit more like thumbs up, thumbs down. This feels good, this doesn't. Whereas a computer can be more, just AI can just be more like, I feel that this is worth 625 and not 695.
Interesting that. Let's maybe dig a bit deeper on that, because a lot of people, well, especially residential properties to buy their own home, we're using emotion a lot of the time. And investors get caught up using emotion, like it or not. Your bots, as you say, are totally emotionless. So you're just absolutely looking at the data and the research. How does that, I suppose, how do you break down the fact that, all right, I went to auction, I want to live in this house, I want to live in this suburb, I've paid 50 grand too much for this property, but I'm okay with it because I'm going to live there for the next 20 years?
Yeah. Okay. So if you're describing a home buyer situation, it may be that there is really something that you will always have, that you will love, that will make it worthwhile. So that's more of a consumption decision. And we can certainly provide a lot of livability data. So that's perfectly fine. Just keep in mind, though, that if you're paying 50 grand too much, that's 50 grand less equity for whatever you want to do later in life. Do you want to get a investment property, and that's going to compound over time. So even though you pay too much, the property will still likely grow in a supply constrained market like Australia. But that 50 grand is going to be worth more and more as time goes on. And so you want to be, regardless of what you want to do in life, you should be building equity if you want to retire early, if you want to get into the real estate market or whatever. So yeah, it's crazy for anyone not to be thinking about what the true price is. And another point on that is, you may be falling in love with something that other people don't value that much. Yeah. So don't pay extra for a bush frontage or a pool, because these things don't really increase the value of a property. They turn a lot of people off. So don't think that you have to pay more for a lot of these extra things. In general, regardless of what kind of property you buy, you want to have things that are going to appeal to everybody. Everybody wants bedrooms. Everybody wants garage spaces. Everybody wants to be near work. Those are the kinds of things. Whereas this emotional falling in love thing can lead you astray from a personal finances point of view.
Kat, I'm a sucker for a good kitchen.
Yeah, the bot doesn't care what the kitchen looks like, right?
No.
So post-COVID, we've seen this, I suppose, pattern of, well, through COVID, people moving out to the regional locations, and then some of that's retracted. What sort of data have you seen? What trends have you seen post-COVID in respect to that? Is that what you're seeing on the ground?
Yeah, so with COVID was a good example of how markets can reset. So we had seen capital city growth, and then suddenly it became all about the regions. So obviously there's a dynamic now where people can work from home. I'm not the biggest, I don't commentate as much on like trends. I don't think anyone really knows exactly where things are. Our focus is more on what can we prove over a long period of time. And there's only been one pandemic. But my hunch is that, and certainly we're seeing a lot of interest in satellite cities, Central Coast, Geelong. So I don't see that going away. Maybe you need to go into work a couple of days a week. As work gets more digitized, as AI comes in, I don't see everyone going back to full-time work personally. But there's it does open up this great big country of ours to lots more opportunities, and the very best opportunities come in quite small places actually. So like the model that we built, that could have done anything it wanted to, but the bots that survived and made money consistently do things like buy into small towns, very small towns, too small to have a property industry in, that have been like laggard for a very long time. And then suddenly there's this rubber band flip up, and it goes up, and it was able to kind of pick the right time to go in. So it's a little bit like penny stocks, knowing when these things that aren't worth much, suddenly they come back as it resets to the overall market. So I see that as great opportunities in the current market to be looking where others don't in very small places.
And do those places, just on the back of that, need to be in prominent locations, like close to water, capital cities, access to amenities, etc.?
Close to water is great, I believe, in general. So we've seen that. So that does help in general. But for this particular trend, in terms of what the bots were picking up, it is not that close. So like over 50 kilometers drive from the nearest major hub. So more than 50 kilometers from Dubbo or, Toowoomba or whatever.
Right. Interesting.
Very interesting. So if someone only had 10 minutes to research a suburb, what do you think they should look at first?
I would look at, so if you believe us and our forecasting model, the easiest thing is to just get the forecast from us. But if you're not convinced yet, like most people aren't, because most people go to REA and Domain, I would be looking at price. I'd be looking at comparing the price to other comparable suburbs, not just the like suburbs, but also like looking at the ratios. So as you're going further away from town, is it in line with what you would expect? As you go down away from the CBD, prices per square meters should decrease. So because people will move if it's a market's too strong. If there are better options available, people will move elsewhere. They might have a little bit more equity, and so they move closer to town if there's an overpriced suburb further away. Price is the fundamental thing. I can talk about gentrification and all kinds of stuff if you like. That can come. I don't know if that's coming in future questions, but
look, you've hit the nail on the head. We're actually going to take a break, and when we come back, we're going to talk about that word gentrification, because it sounds complex, but at the end of the day, it's actually quite simple. So we'll be back just after this.
This is Property is brought to you by Sphere Home Loans. Sphere Home Loans is a mortgage broker that helps our listeners all around Australia. So, if you want to get into your first home sooner, looking at upgrading, an additional property, or want your current mortgage reviewed, just search Sphere Home Loans or click the link in the show notes, and their dedicated brokers will be able to help you wherever you are. If you are, however, after personal financial advice, don't get it from a podcast. If you would like help based on your own personal situation, head over to moneypodcast.com.au, click Get Help, and we'd be happy to introduce you to one of our trusted professionals. That's moneypodcast.com.au and click Get Help.
You beat us to it, Luke. Talk to us about gentrification and how much it plays a part in your research.
Yeah, so we look at data over long periods of time, decades. Government data started to get good about 2005. So we're looking at about 20 years. And the key finding is that you want to avoid the underclass. So public housing, you should be at least 200 kilometres from any public housing to get the best growth. You certainly do not want your local pocket to have more than 70 or 80% public housing. Then you're really constrained by capital growth. Underclass factors are quite inhibitory. There's a whole lot of different factors, and we'll be coming out with more on this research soon. As you move up the socioeconomic stratum, it's perfectly fine to have a working class town, as long as it's not in mining. It's okay to have a bit of biffo at the RSL on a Saturday night, bit of crime like that. That kind of crime doesn't matter at all. And then as you go up the ranks, middle class, upper middle class, just note that as you're getting to the higher levels, it's quite cyclical. So this is an area, we're not putting it right into our stats, but overall, your upper middle class, so once you get your PhDs kind of people, post-materialistic, they start to have other investments. You see capital growth as less, but it really does depend on what part of the cycle you are in on that level. So the overall economy, obviously, as you go to the bottom of the market, it gets more resilient because you have, even if people at the bottom get priced out, you have people just above that will now go and buy there. So as you see in Sydney now, you have all of these high-educated, high-income, young Gen Zs moving to areas that they would not have moved to a generation ago, much further out. So, gentrification is a really powerful predictor, and so we provide scores on all that kind of thing. Another thing to look at is if you're starting to think of like hipness and cosmopolitan, so amenity, all those things are good, but they are also where you have amenity and walkability, you can also have more supply. So governments like to put unit blocks in those areas. They might put more transport in, which is great, but at the end of the day, supply and demand trump everything. So if you think that it's really hip and upcoming and they're going to put in more unit blocks, I'd be more focused on the unit blocks than the fact that the cafes are getting cooler.
Yeah, interesting. Yeah, there's so much to unpack in what you've just mentioned there. But I want to go back to what you said about public housing. Did you say 200K from public housing?
Meters.
Oh, meters.
Yeah, you couldn't get 200K from public housing.
I've written down
anywhere.
200 kilometres with a big question mark.
Maybe I misspoke.
That was my mistake. So.
All right. No, look, I thought I heard kilometres. In any case, 200 metres sounds a lot better.
I can do 200 metres. That's perfect.
It eliminates quite a number of locations otherwise. But when you define public housing, are you talking one house, two houses, one apartment block, three apartment blocks? What do you define as public housing?
Yeah, so we look at individual homes and we look at the concentration and we look at radiuses. So at different radiuses, how much public housing is there? And when it goes above certain thresholds, how much? So everyone kind of knows that public housing is bad for capital growth, but it's like, for me, I'm a geek. I'm not satisfied with that. Like, obviously, if you've got one single public housing home on the other side of a large suburb, that's obviously not going to hurt you too much. Whereas if it's really concentrated in your area, then that leads to a massive reduction in capital growth.
And on the back of that, do you see clusters of suburbs like lower socio / public housing? Like, is an indicator this suburb's got a high public housing percentage. However, it's right next to a blue chip, better conditioned suburb?
Yeah, so you're getting into the area of, does the public housing get constrained? So do the people stick, as you have very different populations with different social norms, do they get more restricted? It's an interesting question. My instinct would say yes, you would see parts move, which is why we provide street level and pocket level medians. So we see all the time streets in suburbs go in different directions. And so it's just like when you go to property inspections and you see the same people over and over again, even though you're in different suburbs, it's like, yeah, that's your market. Yeah. And then there are other property inspections happening in that suburb in a different price band where different people are going to be. So, coming back to that, public housing, yes, you should be looking on a pocket level as well. So, I mean, if you're losing 1 or 2% capital growth because there's any public housing in there, there's many other factors that go into it. I wouldn't see that as a absolute reason not to buy.
Yeah. So you mentioned that, a lot of people go straight to, realestate.com rather than doing the data research. And I have to admit that I've been guilty from time to time on going on gut feel. What do you think are the top 3 mistakes people make when they're buying property or when they're trying to interpret that data? Like, what do you think the errors are that you've seen?
So as we covered, momentum is huge. Suburbs are going up over a long period, so they think it will continue, when in actual fact it's going to go into reverse. Not checking supply is a massive thing. So not checking to see what's coming in. Are there going to be a whole lot of new units in an area? So mistaking amenity, thinking amenity is just going to be baked in. A huge another one is that amenity is very often already baked into the price and doesn't necessarily mean it's going to grow. So people, or if there's already a good school and there's already good parks, why does that mean it's going to grow? People are already prepared to pay more. So those are huge mistakes. And also just buying in your local area or areas that you're familiar with, or areas that you have fallen in love with. That can be a very subjective experience, and you don't really have an insight into how much that vibe is repeated throughout the country and what's really behind closed doors as well. So what you see out on the street versus, are people earning extra income? Are they, is the suburb up and coming and growing? You might not see that just by looking at the local shops.
You mentioned supply, Luke, which is ultra important. You mentioned supply demand being probably the number one indicator if we had to list it. How do you analyse supply? Like you can go on to sort of like RLB Crane Index and see how many apartments are in the sky or how many are ready for development or anything like that. So you can forecast some. But then you look at a 1,000-lot subdivision in a local area and the time in which that's going to come out of the ground is hard to anticipate with councils and services and rate of building and everything else. So how do you really get a true indicator on the supply in an area?
Yeah, the easiest thing to do is look at what's being actually built or has been built. If it's units, then they're already up and they haven't been sold yet. And another thing is that you should look at supply over a fairly wide area. So we found that unit markets over much wider areas are more correlated. So people will go up and down a train line, for example, to buying units much more than with houses, where houses, people are more grounded on a particular area. But yeah, in terms of supply, there's obviously, very much look at a larger, wider context, particularly in a capital city where it's going to be much more dispersed, or any large area. And then supply conversely can be a positive thing in a small town because it can mean that it's got critical mass for more amenity. So like the town is thriving. But yeah, in terms of going back, obviously there are there's development control plans that are put through by the government. Here in New South Wales, there's a lot of pressure from the state government to override what the council wants and build a lot more. So it gets hard. And there's also like what properties. So we know what properties are getting split way before they're built. So that feeds into our forecasting model. So that is definitely helpful. I mean, at the end of the day, if you knew what the developers are saying, who's paying the government, I mean, you could probably learn a lot inside information. But yeah, absolutely. And when you said supply and demand are the most important indicators, everything else feeds into those. So they're like the thing. So every other indicator feeds into supply and demand, current and future. So it's like they're actually the indicators, and everything else is subsidiary to that.
It's a very good point. And vacancy rate is probably an example of that, isn't it? It gives you an indicator of supply in a certain area along with investor percentage, etc.
Yep, absolutely. Yep. So, yeah, you may have a lot of vacancy in an area. It's mining in a town, the mining boom has passed, and that's a pretty bad sign.
Yeah. So with AI such a hot topic at the moment, and all of that analysis with property decision making, tell me what you're excited about. What's happening next for Microburbs?
Yeah, so we're coming out with lots more thresholds for all of our indicators. So instead of simply saying this is the yield, this is the vacancy rate, we're going to be marking everything as saying if you're above this certain threshold, then the growth is going to be this much more. So because constantly people look at the reports and go, okay, that's nice, but what's a good level? So answering that, turning everything into a red, green, and amber is the real big project we're working on now. And all of this will be based on analysis of 20 years plus of transactions. And so we're going to have lots of research to back up all of this stuff.
So let's unpack that for a little bit if we can, Luke. Like what's good for me might not be good for you from an investing strategy point of view. Like an example of that is I might want a 4% gross yield, but you might only need 3%. So that will change the area in which we invest in. But are you looking at that from a point of view of value for money? Not I don't want to use the word hotspot, but how do you distinguish someone's strategy from the raw data?
So yeah, we have a tool where you can specify how much cash flow you need. So you can say, I want this much yield, this much rent. So you want this much growth. And some people are going to be more risk averse. So you would go more for your capital cities, blue chip. And then other people are going to be like, I want lots of upside. They're younger in life. And they might go for a small town.
Okay. So again, to finish the supply demand piece, I look at Australia now and we're investing in a lot of suburbs around the country right now. And I feel, and we've spoken about it on the show a lot, that there is hardly any supply and heaps of demand. And what are the trends showing in respect to, like, the governments aren't keeping up with building houses, whether it be affordable housing or just any housing. So, like, do you see that not changing for the next billion years?
Yeah, well, as it stands, we have a Labor government where the majority of the MPs own multiple investment properties. It's in their interests. Obviously, voters don't want a property crash, and people who vote with their hip pocket are typically homeowners, and other people who are interested in other things like climate change are more likely the renters. So from that political point of view, I can see things staying the same. We haven't been able to do large-scale construction despite the good intentions by governments. It's quite a hard thing to do. There's a supply constraint in terms of how many actual builders we have. So, yeah, I can't see this changing. It's I'm not a macroeconomist, but I can't see any reason why, like that. And there's more migrants coming in as well. So that points to a buoyant outlook, despite all the affordability problems that we're facing.
Yeah, and do you feel NIMBYism has a part to play in that as well?
Oh, yeah, absolutely. Yeah, so we've structured our government so that we have these local governments and a lot of people who write in and try and keep their suburb the same way. And we've got local representation with MPs. If we just had a Senate where it was just proportional representation, it was national, that'd be a very different ball game. There wouldn't be, the NIMBYs wouldn't have so much power.
Yeah, so you're saying it's corrupt, basically. But so yeah.
I saw a report this morning that said that the cost of build of a home has gone up 40% since 2020.
Yeah, wow.
It's amazing.
It's crazy, isn't it? Yeah, so NIMBYism for listeners, not in my backyard. There's basically it's a movement, isn't it? It's a real movement to say, well, I've got my McMansion here, no one else is allowed near me, sort of thing.
Yeah. Even more so the older demographic, the baby boomers. They got free education for themselves in the 70s, and now they're getting themselves restrictive zoning to keep things the way they are now that they're in their golden years.
The golden years. Yeah. Very good. All right, so starting to sort of round this out, Luke, if you had to buy a property today based on the metrics and indicators at a micro level, not a macro level, what would you be looking at? Don't have to give specific area or suburb, but
I'd like one though.
You can if you want.
Yeah, so I'd be looking for laggard price growth, being less than neighbours. I'd also look for it to be tightly held. So tightly held properties, tightly held streets, that tends to be a persistent factor that goes on over time and means there's less supply ongoing. And it really is down to like what people know about local knowledge. I would cast a very wide net, so I wouldn't be limited to just an area that I knew well. So I'd be really trying to pan for gold, even though most of it's dirt, rather than driving to somewhere and falling in love, and don't get confirmation from other people. So don't follow the herd. Do the opposite of what others are doing. So if it looks crap to other people, if that crapness is reflected in the price, that could be a good reason to buy, as long as that crapness isn't because it's a mining town.
Yes.
Yeah, it's
They've
getting
got a bad
emotion.
rap, those mining towns.
Oh, they have, yeah, and rightly so. If you look at the history of it all, but it's being emotional about those that are being over-emotional, essentially, is what you're saying.
Yeah. Now, I have one last question, Luke.
Yes.
Do you ever find the data contradicts your personal gut feel?
Yeah. Like year or two ago, everyone was saying to Perth, our models kept saying, go to Perth. And people would say to me, come on, Luke, you know about mining towns. Perth's just a big mining town. What's it got? And I'm like, yeah, I get you on a like psychological level, but still just price. I mean, I deferred to the algo, even though I was like, yeah, I didn't feel like I wanted to go out and say Perth was the one, but of course it turned out to be. It was underpriced relative to other capital cities. And it came back up. So yes, there's lots of times. It happens a lot. You look at it and you go, wow, there's all these things that you think are that important, but they're not necessarily the most base fundamentals. Price predicts price. That's something I've learned in my data science in all kinds of areas. So it's that goes up to the top. Many different ways of looking at price.
Yeah, very interesting.
So AI and bots and algorithms and all that, they probably weren't around too much when you first started here. They must be doing majority of the heavy lifting for you. Have you just got your feet up now?
So yeah, we can do stuff faster, absolutely. So yeah, we want much more intuitive kind of people that can see all the way through, that can like describe what they want. But in terms of predicting stuff, that's still down to the numbers. And but yeah, the real exciting area now is like analyzing the images and the maps. So now with the AI, like you can feed it these complex things. You know, it's just a whole lot of dots of different colors, and then it can draw a lot of inference out of that. So yeah, there's more work than ever. Like we can cover off more things. So the days of like, humans will never, you can't replace, bots will never be able to look at a floor plan. Those days are going.
Yeah, I'm looking on the website. It's pretty interactive. Over 1 billion data points, which is pretty impressive. So we'll put the link in the show notes to Microburbs for anyone who's interested to check that out further. But yeah, really appreciate the chat today, Luke. I think we'll get a session 2 underway at some stage, Rach.
Definitely. Maybe a bit of a Q&A.
Absolutely. Yeah. Q&A would be great. I'll take questions. Happy to come into the studio. I love that you guys are there, sitting there in the real, and I'd like to prove that I can be in 3D as well.
Amazing. Looking forward to it.
Yeah, it will cost you extra, but I'm sure we'll allow you in.
Yeah, I'll pay the fee. That's fine.
Very good. All right. Well, appreciate the chat. Hopefully you've enjoyed the listen, because research it's out there, isn't it? It's like, have we got the time to do it? Probably not. Should I be doing it? Absolutely. Can I get overawed with all the information? Absolutely. And that's probably where Luke and his team come in. They can make it simple for us. So, yeah, awesome stuff. Thanks again, Luke.
Thank you very much, John and Rachel.
Thank
it was a
you.
pleasure.
Okay. Until next time, this is Property.
Any information given in this podcast is for entertainment purposes only, and you should seek your own property advice before acting on anything you may hear in this podcast. If you want to start or advance your property education journey, John Pidgeon's book, Sort Your Property Out and Build Your Future, is available where all good books are sold, or via the link in the podcast show notes. Opinions or comments from any guests on the podcast are theirs and not those of the hosts, the publisher, or their respective license holders.